All right, ladies and gentlemen, I hope you had a wonderful day. We started off the week very boring, but you could feel the excitement in the air because we have Powell in the Bank of Japan this week. Surprisingly, the only big mover out the gate today was oil, and we talked about that yesterday. But right now, today, we got to talk about the Fed and the dot plot. And if you want to understand all of this, I encourage you to watch every single day. Today is now part 2. Yesterday, we were talking about the SEP, what the market is looking for. Today, I am going to explain the dot plot tomorrow. And then the next day, up until the day of the event, I am planning on dropping these little pieces of gems and giving you market updates. So if you're never getting the full thing out of this video, I encourage you to start from the beginning of the week. But that's what we're going to talk about today. And we are going to have a lot of things. There's a couple of plays that I'm looking out for, but I really think it is going to be simple mixed with focus on the big events and then juggle whatever happens with oil. So, Chad, we got a lot to talk about. I got the plays for you, got the keys, all that good stuff. What I need from you is a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. We will see you there. It's free 99, and yes, you see Jerome Powell. We're going to have Powell up there on Wednesday, but you got to get prepared in the meantime. So, right off the bat, we're going to get into the news and the recap, but before any of that, we got to run it, and then I'm going to introduce you to News Josh, okay? So, run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, I'm News Josh, and I wanted to give you guys a real quick recap of all the headlines. So it was actually pretty quiet from a headline perspective. September builder confidence missed, fell to the lowest level since April. Then the UAW rejected the latest pay increase from Stellantis, though the talks over the weekend were described as productive. House Speaker McCarthy said that this weekend he hoped to avoid a government shutdown, though reiterated some demands, including an 8% spending cut. Treasury Secretary Yellen said it's too early to forecast the impact of the UAW strike on the U.S. economy, and noted the labor market is cooling, though still healthy. Also, more focus on global chip demand after TSMC asked suppliers to delay deliveries, and officials from U.S. and China continue to meet, though unclear if Biden and Xi are going to meet at the G20 in November. Okay, thanks. Bye.
So that was News Josh. If that was too annoying, just take the laugh today. We'll never do that again. But what he was saying was facts. There was all of that news today. I think the thing he missed was no home builders. He brought that one up. And then Apple, they had positive sell-side commentary from iPhone demand. There was a headline on Tesla's supercomputers, AMD, NVIDIA. They sold off a little bit more from that TSMC news. Again, he even gave you that update. And then there was more stuff related to Ford and Stellantis. But that was pretty much all we had today. There was movement in rates and bonds, and a lot of people were asking, why did the rates do this? What's going on? But I kept pointing people towards oil, just like we discussed in the video yesterday. That will become a problem. If oil goes up too much too fast, just like too high for too long, that will be a problem for the Fed. So that was the big deal of today. Other than that, we're getting into more stuff, and now, so you could understand Powell a little better on Wednesday, the next thing of our discussion that we need to focus on is the dot plot. So I'm going to show you where to find it and how to get it and what you need to be looking for on the form when the data comes out. But before I do that, I want to give you another update and show you why this is important. In financial media, as of late, over the last couple of days, you may start hearing or you may have heard about the dot plot. Why is this thing so important? Here's a little breakdown. It's talking about things we discussed as well in the earlier videos. And like I said, I want to be able to string these videos together to give you the whole picture and really understand it. But we already know 100% chance that the Fed is going to hold. We looked over the Fed futures yesterday. There's some talks about changes to the policy statement. People are expecting few ones, and they are expecting Powell to be data dependent and say that they're waiting for this and that. They bring up the summary of economic projections and highlighting the median dots reflecting one more hike this year. Again, there's even more statements. Evercore said recent sticky inflations, officials might be more aggressive. There's some good info. You can read that here. You could pause it. But here's the thing you got to understand about the dot plot. everything we were talking about yesterday, all of those numbers, where the terminal rate is, the dot plot is pretty much just the accompanying chart, and it is showing you where all the Fed members are, and this is where people are going to get more information tomorrow. So let's go over how to find it and what we need to watch. So again, you go to the Fed website, monetary policy, meeting calendars and information. You go down the SEP every 3 months. So we'll go to the June one. It says projection materials. The other ones don't have that. This meeting in September on Wednesday, it will have that. But the projection materials, that's the summary of economic projections. Yesterday, we went over page number 1, and we were looking at all of the specifics, what the market is going to be reacting to. Again, the Fed funds rate of 5.6. I want to highlight that here now because we're going to go a couple pages down, I believe page 4, and now you have your dot plot. And what this is showing you is the Fed members all anonymously voting where they think rates should be at the end of the year. It's just their opinion. It's not supposed to be policy. Fed will even say it's just this, it's just that, but people use this to gauge where the Fed is at collectively, and just in case if any outliers skew some of the averages. But what I want you to notice is this is the dot plot. This is literally how they come up with the terminal rate. They go with the median number showing where that terminal rate would be. That's why we are at 5.6, just barely above 5.5. So why is this interesting? Because like we've been talking about, the rates right now are between 5.25 and 5.5. Based on 3 months ago, there was only about 6 Fed members who thought we should stay or be at this range by the end of the year. The other 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, they thought we would be at 5.6, one more rate hike from now or higher. So why is this important? Because remember, yesterday we're talking how much higher for how much longer. Well, the dot plot could give you more information, and what I'm suspecting coming into this is that, if the number is too close, I would not put it past Wall Street and analysts to really just dive into the nitty-gritty of this, and if you have more members lower or the same than not, even if the number changes or not, you will have people focus on this, and then depending on how variable it is, if it's more spread out, then you're going to have people expecting more volatility coming in the Fed because the numbers aren't tight. They're not as in unison. Now, another factor to consider is if we did get dissents. That's based off the last thing I said, but quite frankly, for the last year and a half, you haven't had any dissents on any Fed decision, so people aren't as concerned with that. But now, taking this into the other factor like we discussed yesterday, it's not only about 2023, it's also 2024. So the difference with this meeting is you're going to have a lot of people focused on the dot plot for 2023 because we have a couple of meetings and they want to know where we go from here. But now on the other element, 2024, again, that Evercore thing, it was related to rate cuts. When are they going to cut rates? Higher for longer? How much higher? How much longer? The dot plot into 2024, this is going to be pretty much our last view at it until we get into the beginning of the year and then start going over from there. So that's why this is all important. Now the dot plot, like I'm saying, I see a lot of people stressing on it. Do I think it's the most important? No. I do think if there are major outliers, it will be, but what we're really looking for here, we want to be able to see these numbers. And like I'm saying, if the unemployment rate does not go up in the next year or even on this year, but we're seeing higher or lower rates, that could tell you a big part of the story. Or is unemployment expected to stay low and then GDP drops or goes up? And again, how does that affect where the Fed sees inflation? Or again, the median funds rate. They also do have inflation, but that right there is going to tell us a lot about, okay, how much higher for how much longer. And now just the dot plot, this is going to be the accompanying factor, but I'm telling you, Wall Street is already focusing on this, and this is why with both of these videos together, what I'm hoping you are understanding is that this leads into the other one. This is a visual representation of the first thing we saw, but it does give us info. Again, when we listen to all of those Fed speakers moving forward from this event, we're all going to be trying to guess who's who on the dot plot, and that's why this will be so key. So that's the breakdown I have for you today. Other than that, like I said, the events of today, I am expecting more China stuff. That China chipmaker stuff's not good, but even in general, with some of the on and off stimulus news, that's what we got to pay attention to. Other than that, though, I think tomorrow we'll see if we get driven by anything globally, but you might get this holding pattern into Powell. And then after that, I think the fireworks start because it's now post-expiration and the Bank of Japan follow-up. So I hope you're ready, but let us get into the plays. So, right off the bat, I got 3 different plays. I didn't make any trades today, but I am going to make a trade that I'm kind of surprising myself with, but I think I have to respond to the market a little bit. So I'm going to go over that, but play number 1, I'm going to start with a weird one just to get you hyped up a little bit. NKLA. This was a random play. People brought it up, but this actually showed up on my news scanner as like one of the biggest movers of the day, and it was because they replaced the COO, and they're talking about launching this fake truck, bro. So I got a random play on it. I'm down if it goes up, but a lot of people brought this up. I think it'll be interesting because, again, in this volatility, depending on where things go, it's kind of been few and far between. These small caps can hold up. So if they do, watch it. Am I going to play it? No, not at all. But again, this was one of the news events, so I thought we'd bring it up. And the fact that it's up 44%, I thought it was interesting, but be very careful. But that is play number 1. There was some after-hours news, I think, with NEO and some of the China EV, but watch that whole industry in general. And speaking of industries, we too, but that's another one with all of the headlines we've been getting. But that's the first set or play number 1. Then play number 2. This one's actually crazy now too. I'm actually gonna, but you have to take this one with a grain of salt. And I encourage you to take the idea, because I'll share with you how I got the idea and what I plan on doing. But essentially, JP Morgan gave a huge upgrade to ZIM today. ZIM. You've heard about this. I don't even think they pay the dividend. Chad, say it below whether or not they pay the dividend or not. I don't know if they cut it completely or just lowered it, but this play, a lot of people have heard about it over the last couple of years, but they upgraded it on shipping. They're saying the costs and the low margins and all of that will get renegotiated, but the way I'm looking at it is like, I think shipping, and this was the idea that I got from it, I would watch all of these shipping companies. I think ZIM is on the lower end, given some of the hype and the back and forth with all that dividend stuff. But at the same time, all of these shippers and what we have going into oil, if that does pick up, that could be a great area to look at. So taking that idea from JP Morgan, they brought up ZIM. I think maybe keep an eye on it, but that dividend and how it's played, that has me a little sketchier. But I will be watching shippers. Again, anything to transport oil, energy, I do think that could become very pivotal. Maybe not now, but over the next couple weeks and months, especially as we really start to solidify what is going to happen with oil. So that is play number 2. And then finally, play number 3. This one is very interesting, but it is the 2-year bond, and I want to close out of it. Remember, I did the curve steepener. I went long on the 2-year, and I'm short on the 30-year. I'm planning on holding my 30-year short and then buying and selling out of the short end because oil. I was telling you about oil. I like the bond play, and I don't know if you guys remember this. It wasn't too long ago. We were just talking about 2001 or 2006. I really think this is an awesome lesson, and this chart may come back. You may remember this. This wasn't that long ago, but we haven't really found out that answer. And now I think with oil going up and literally leading out of the gate, that very well may point it to us, especially with the Fed meeting right around the corner. And if you don't remember what we were talking about, it was comparing the pause of interest rate hikes in 2000 or in 2006. It was like 1999 when they paused and then they resumed. The 2-year bond, it started going crazy after they resumed. In 2006, when they paused and actually paused, the rates never went higher until they started to get lower. And that's what we were saying, what we need to be watching for this year. Does it finally break out above 5 or not? It's barely above there, and this is where I'm saying, I'm kind of down to close my 2-year play because it's been a while, and then now I do think I'm going to go back to it because eventually the 2-year will fall, but if oil does lead up, I don't think it's going to be favorable for interest rates, and I think we are going to start to watch some carnage in that area, so I'm down to keep this short and then get out of the long side, but I am still in the yen. That's kind of like the parachute just in case the timing's off and they have their own little thing they're working on. So That's play number 3. Let me know what you think. I'm going to go over this one tomorrow. Again, I'm still in all of those plays for now. I haven't moved, but I'm sharing with you my idea. I got a little flexibility in timing, and I've been holding it for a while, so I don't have to do it right away, but this is this plan that I have in my mind with it all, because I'm like, wait a minute, I don't know how I really feel about this oil per se, and then we'll see where that takes us. But that is everything, Chad. I hope you enjoyed it. I have no other plays. Nothing else. Again, maybe the ARM IPO, Kyova, and then Instacart. Those are going to be very active. We'll see what happens. But other than that, I think it's all about the data. We'll see if we get any other action, and then respond to the Fed, respond to energy, and get ready for the next year, because it's almost here. And that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure to post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, there's power in the name. That's all. That's all I got. Bro, you got to see. You know, I don't. It's so amazing today. I'm telling you, my mind is blown. Today was a miracle. And I don't know if that was expected or supposed to happen. And I was saying it yesterday. We don't know what's going to happen. And it's funny, and it's not what you think it is. You have to be there. You had to really, really be there to see it, man. And for real, it's crazy to think, man. And there's just power in that, and just power in the name. And I'd rather be persecuted than not for that than anything. And it's beautiful. I'm so hyped, Chad. I hope, and get ready. So it's great that we're doing this in a Powell. So I love you. Have a wonderful evening. God bless you all. And that's it. I'm leaving. Goodbye. I'll see you later. I'm out. Horde. I'm too hyped. I'm too hyped to be awkward, bro. That's it. Praise. Oh, they don't feel me.